Good day, everyone. We are doing accounting, National Senior Certificate. We are specializing with this paper for now, which is November 2022. Accounting November 2020 in bracket 2. We are doing paper 2. We have already done question 1 and question 2 of this paper, and today we are continuing with question 3. And question 3 is based on budgeting. Question 3 is based on budgeting. Budgeting. It is very important that the business needs to budget so that it does not experience cash flow problems. So this section is a very important section of the business, because if the business is failing to budget accordingly, then the chances that the business may run out of cash, they are very high. So therefore it is important that the budget must be done properly so that we are able to meet the daily life expenses of the business, the daily operations of the business, and all the expenses that are incurred on daily basis. So this is the budget. Question 3, it says Blossom Pty Ltd sells expensive ladies' dresses of high quality. They also repair dresses for customers, but they aim to break even on this service. Customers are allowed to buy dresses for cash and on credit, but they are required to pay cash for all repairs. The information relates to the budget period ending 31st May 2021. So our budget period ends on the 31st of May. We are budgeting for 3 months. We are budgeting for March, April, and May. Right. The first thing maybe that one needs to clarify here is that when the business is selling, you will have something that is called total sales. Total sales. And the percentage for total sales is 100%. The percentage for total sales is 100%. The total sales will give you 100%. But the business, there are 2 methods of selling. The business can either be selling for cash or be selling on credit. Selling for cash or be selling on credit. If the percentage for cash sales is 60%, for example, it will then mean that the percentage for credit sales will be 40%, because the total sales percentage is 100%. So it's very easy in the business to budget for the cash sales, because when you are selling for cash, when you are budgeting that you are going to sell for cash for 100,000, you know that you will be selling and at the same time you will be receiving that cash. So if your budget is 100,000 cash sales, it means those cash sales, that amount you will get it on at the same time. So it's very easy to budget for the cash sales. But the problem comes when we now have to deal with the credit sales. It's very difficult to budget for the credit sales, because when you are selling on credit, you don't get cash at the same time. You're selling to your customers, and then your customers are paying you at a later stage. So that is why when you have to do the budget, there is a schedule that is very important for you to do before you go to the cash budget, which is called the Debtor Collection Schedule. Because remember, the people that buys on credit from us, when we are selling on credit, those people are given a special name. They are called debtors. And when we are selling to them, we do give them the credit terms as to how are they expected to pay us. So therefore we can be able to budget accordingly, because we know how are we going to collect our money from them. And we also focus on the past experiences as to how have they been paying us, and therefore be able to establish as to how are we collecting the money from the debtors. When you look at this business, if you go to your question paper now, on page 10 of the question paper, question 3, there is information A there. Information A has got total sales and cost of sales. We have the total sales for March, April, and May. And there's a transaction there which tells us that goods are sold at a markup of 75% on cost, and credit sales are expected to be 65% of the total sales. Credit sales are expected to be 65% of the total sales. If credit sales are expected to be 65% of the total sales, then that tells us that our cash sales is 35%, because total sales should give us 100%. So here we are selling on credit, and the percentage for credit sales is 65%, and therefore for the cash sales it will then be 35%. And if you go to transaction B, we have our expectations there as to how are we going to collect the money that is with our debtors. When we sell on credit, how do we then collect our money? So expected debtors collection based on the past. So in the past, 40% collected in the month of sale. There is 40%. 40% is collected in the month of sale. 40% collected in the month of sale. 40% is collected in the month of sales for a debtor to qualify for 6% discount. 40% is collected in the month of sale, and therefore you will then have a 6% discount. In most cases, businesses, when you are paying within the month of sale, you qualify for a discount. That is another form, that is another way in which businesses encourages people to pay as early as possible, because they tell you that if you pay within the month of sale, if you buy in March and you come back at the end of March, you pay same time, you will then qualify for a 6% discount. And then 50% is collected in the month following the month of sale. So the first collection is 40%, the second collection is 50% in the month following the month of sale. The second collection is 50% in the month following the month of sale, and then 8% is collected 2 months after the sale. And then the third collection is 8%. The third collection is 8%, and then we are told that 2% is regarded as uncollectible. So 2% is bad debts. 2% bad debts. So 2% is bad debts. Remember, when you are budgeting for something that you have not yet received it. We are budgeting for the money that we are going to be collecting from the debtors, and it is always right to leave that room for disappointment. You cannot be budgeting for 100%. If you look at this business is not budgeting for 100%, because they are budgeting for 40 to collect 40% in the month of sale, 50% in the month following that, and then 80%. And if you add these percentages, you get 98%. So this business is expecting that 98% of the amount that is money that is owing by our debtors will be collected, and only 2% will be written off. We are expecting that out of the 100% that we sell on credit, then 2% will not be collected. It will be bad debts. So let us then start with our calculations now. Let's look at our debtors collection schedule here. We have the month, the credit sales, money to be collected in March from our debtors, April and May. So let's start with January credit sales. January credit sales amount to 204,750. And if you look at our collections, on average, we are collecting within 3 months. Month of sale, the month following that, and then the month following that. So we have these percentages, these 3 percentages. So if you look at the credit sales for January, which is 204,750, so we are planning to sell on credit for 204,750. So the first collection will be in January, according to that, because we are saying that the first collection is in the month of sale. So the first collection will be in January, the second collection will be in February, and the third collection will be in March. So this is the third collection. So which then tells us that in April and May, we are not expecting to get anything from people who bought on credit from us in January. So if we want to verify this 16,380, we can check. Let's take our calculators. The credit sales for January was 204,750. Credit sales, we sold goods to the value of 204. We are planning to sell for 204,750. And then the first collection will be in January according to that, because the first collection is in the month of sale. So the first collection will be in January, the second collection will be in February, and the third collection will be in March. So the third collection is what percentage? The third collection is 8%. So let us prove 204,750 multiplied by 8%. Multiply by 8% and see what is it that we are getting. 16,308. So this is the 16,380 that has already been calculated for you, and we are not expecting to get anything from the people who bought in January for in April and May, because they would have finished paying, because it will be January, February and March. And now let us proceed to the credit sales for February and look at our collection. The credit sales for February is 250,000, and the first collection is going to be in February according to how we collect from the debtors. So it is going to be February, March and April. That's 3 collections: February, March and April. So it means we are not going to receive anything in the month of May from the people who bought from us in February, because the first collection is in the month of sale. So if we are counting 3 collections, if we sold to these people in February on credit, so if the first collection is in the month of sale, it will be February, March and April. So which then tells us that in May we will not be receiving anything from these people. They would have finished paying us. So proceeding to March, the credit sales for March, we are planning to have 364,000 credit sales, and then the first collection will be in March. So the first collection, because the first collection, this is very important to note the first collection. The first collection is in the month of sale. So if we sold these goods to them in March for 364,000, the first collection will be in March, the second one will be in April, and then there will also be the third one in May, which we need to calculate. And then what is the percentage of the third collection? It is 8%. So let us then calculate 364,000. 364,000, which is our credit sales for March, multiply by, this is the first collection in March, the second collection in April, so we want the third collection, which is 8%, multiply by 8 over 100, 8%. So that is 29,120. So the third collection will be 29,120. 29,120. And we are done with March, because we have the 3 collections. We sold goods in March. The first collection is in March, the second collection is in April, and the third collection is in May. And then coming to April credit sales, we are planning to have 409,500 credit sales for April. So is there anything that we are going to receive from the people who bought on credit from us in April during the month of March? The answer is nothing. We are not going to receive anything from these people, because they had not yet purchased from us. They purchased in April. So the first collection will be in April. So the first collection will be in April, which has already been entered in our answer sheets for us, which is 153,972. So it means now we need to calculate the second collection, because if they bought goods in April, it will be April, May and June. But remember, our budget period ends in May, so we just have to calculate only May, because April has already been calculated for us. So it will be 409,500 409,500. The first collection is April and the second collection is May, and the percentage for the second collection is 50%. Multiply by 50%. That is 204,750. 204,750. The second collection will be 204,750. Let's just verify this. 409,500 multiplied by 50%. You can just divide it by 2. 50% is just divided by 2. That's 204,750. We are still going to receive something from the people who bought from us in April during the month of June. But we are not going to calculate June because we are only budgeting for March, April, and May. Now coming to May, the credit sales for May, the amount has not been given, so we need to calculate the amount for the credit sales for May. So, but what is it that we are having here? We are having the total sales for May. The total sales for May is 770,000. That's the total sales given in information A. And we were told at the beginning of the transactions that credit sales is 65% of the total sales. So it is 770,000 multiplied by 65%. 770,000 multiplied by 65%. Let's check. The total sales for May is 770,000. Then it will be 770,000 multiplied by 65%. That is 500,000, 500,000. So the credit sales is 500,000, 500. 500,000, 500. Credit sales is 500,000, 500. Right. Now we have the credit sales for May. The next question, is there anything we are going to receive in March from the people who bought from us on credit in May? The answer is no. Right? April, the answer again is no, because these people bought from us in May. So they were not owing us anything in March and April. So they only bought from us in May, and their first payment, the first collection, will also be in May. And because here our collection, we have 40% in the month of sale. So the first collection will be in May, which is 40% in the month of sale. Let's calculate that. So we have 500,500 multiplied by 40%. 500,500 multiplied by 40%, that's 200,200. But remember, these people are entitled to a 6% discount. So therefore the calculation will be 500,500 multiplied by the first collection is 40%, and then the discount is 6%. So which then tells us we are not going to get 100% of this amount. So if the discount is 6%, it means we will get only 94% of this amount. 94%. So it's 500,500 multiplied by 40% multiplied by 96%. Multiplied by 94%. 94 over 100. So the amount is 188,188. 188,188. So you have 188,000 here, 188. The first collection, please note the calculation of the first collection. The first collection is subject to 6% discount. It's 40%, so that will be 500,500 multiplied by 40%. But that 40% again is subject to 6% discount. And if we are discounting it by 6%, it means we are not going to get 100% of that amount. We are only going to get only 94%. That is why it is multiplied by 40%, multiplied by 94%. And then the amount is 188,188. So now we need to calculate the total, because the instruction here was to complete the debtors collection schedule for March to May. So we need to calculate the totals here. The total. Let's start with May. Our total for May will be 29,120 plus 204,750 plus 188,188,000. That's 422,058. 422,058. That's the total that we are expecting to receive from our customers in May. Let's calculate the total for April. The total for April is 20,020 plus 182,000 plus 153,972. 153,972 equals to 355,992. And the total for March? Total for March is 16,380 plus 125,125 plus 136,864 equals to 278,369. 278,369. So these three amounts now have to be transferred to our budget. So we are expecting to receive in the month of March, we are expecting to collect from our debtors 278,369, and from April it's 355,992, and May is 422,058. So this is the debtors collection schedule. It's like this thing, if you can make a practical example of it, is that when one can lend you like 100 rand, if you can borrow 100 rands from someone, it will be difficult to budget for that 100 rand if you do not know how are you going to collect it back from that particular person. But if that person can then tell you that I will be giving you on Monday 50 rand of that amount, and then on Tuesday 20 rand of that amount, and then on Wednesday 30 rand, then you can be able to budget, because you know that on Monday you are expecting 50 rand, on Tuesday you are expecting 20 rand, and then on Thursday. So this is what we are doing. We are selling on credit to our customers, but we do have a pattern of how our customers pay us. 40% of our customers, they pay us in the month of sale. So we can then be able to budget. We know that 40% pay us in the month of sale, 50% pay us in the month following that, and 8% of our customers pays us in the month following that. So that is why it was easy for us to budget. If our credit sales for January is 204,750, and we know that on average we have 3 collections, then we will know that for a person, those people who will buy in January, we will collect from them in January. We will be collecting from them. We will collect from them 40% in January. We will be collecting 50% from them in March, and then in February, and then we'll be collecting 8% from them in March. Then April and May, there will be no collection, because 3 months would have been expired. So it's January, February, and March. For those people who are going to buy from us on credit in February, the 3 collections will start from February, March, and April, and there is nothing we are going to collect from them in May. Same thing applies in the following month. So this is the debtors collection schedule. So then these 3 totals will then be transferred to our cash budget, because now we know the total amount that we are expecting from our debtors. So that was question 3.1, where we were required to do the debtors collection schedule. And then now let us proceed to 3.2, question 3.2. Question 3.2. 3.2 is based on the cash budgets now. 3.2 is based on the cash budget now. We need to calculate certain amounts which are missing in our cash budget. It says here, calculate the missing amounts indicated by A to D in the cash budget, and that is for 14 marks. And when you turn over to page 11, the cash budget is there, it is given. And the missing amount in information A, that needs to be calculated. Information A, that is April. Information A. A The missing amount, which is alphabet A, is cash sales for April. So we are required to calculate cash sales for April. Cash sales for April. Cash sales for April. We are required to calculate cash sales for April. So it's very easy for us to calculate that because we are given the total sales. The total sales, we are planning to sell for the total. We are planning to have the total sales amounting to 630,000 in April. We are planning to have 630,000 total sales in April. 630,000. And we know that when we are selling, the total sales is 100%, but credit sales are expected to be 65%. If credit sales are expected to be 65%, then automatically cash sales will be 35%. So if we want to calculate the cash sales given the total sales, it will then be 630,000 multiplied by 35%. 630,000 multiplied by 35%. 630,000 multiplied by 35%. 630,000 multiplied by 35%. Where are we getting the 35%? We are getting it from that transaction which says credit sales are expected to be 65. If credit sales are expected to be 65, then it means cash will be 35, because credit sales and cash sales combined, they should give you 100%. So 630,000 multiplied by 35%. So the cash sales will be 220,500. 630,000 multiplied by 35%, then it gives you the cash sales of 220,500. Right, we want to continue calculating the missing amounts. We are calculating the missing amounts. The second alphabet in the missing amounts is B. We want to calculate B, right? We want to calculate B. And then if you look at B in your question paper, your B is the loan from Janet Blom. Loan from Janet Bloom that we need to calculate. Loan from Janet Bloom. For which month? We are going to be taking an additional loan in April. Loan from Janet Bloom in April. We are planning to take an additional loan in April, but the amount of the loan that we are planning to take is not given. We are required to calculate it. The only thing that we are having here is the interest on loan. We are having the interest on loan for March, which is 1,365, and April it is 2,625. And if you turn the page onto page 10, there is information about loan from Janet Bloom. Let's just read it. That is information D. Janet Bloom has provided a loan to the business at an interest rate of 9%. So Janet Bloom is giving us a loan at an interest rate of 9%. Interest is not capitalized, and 1/3 of the loan is repaid to her on the 31st of December each year. As the company was still experiencing cash flow problems owing to the coronavirus lockdown in 2020, Janet agreed to increase her loan to the business on the 1st of April 2021. So we'll be taking a new loan on the 1st of April 2021, but the amount of the loan is not given. That is what we are required to calculate. How much are we going to be taking in the form of a loan from Janet Bloom on the 1st of April? The only thing that is here which will lead us to be able to calculate the loan amount is the interest. If you look at the interest for March, it was 1,365, and in April it went up to 2,625 because of a new loan. So let's calculate the increase in interest. The increase in interest. Interest for April is now 2,625. 2,625 minus the interest for March is 1,365. 1,365. So let's get the increase. How much is the increase? Because that increase, it goes hand in hand with the increase in the loan. So it's 2,625, 2,625, 2,625 minus 1,365. 2,625 minus 1,365. So the increase is 1,260. So the increase in the interest per month is 1,260. And we know that the interest on loan is 9% per annum. The interest on loan is 9% per annum. So we need to multiply this by 12 so that we are able to reverse 9% per annum, which is going to be 100 over 9 equals to. So it will be 1,260. 1,260 interest per month, and we want to convert it to be our interest per annum. 1,260 multiplied by 12, so per annum it is 15,120, and we are reversing 9%, because remember this is the interest at 9%, so we want to reverse 9% so that we go back to the loan amount. So 9% is 9 over 100, so when you are reversing it will be 100 over 9. So multiply by 100 over 9. This is giving us 168,000. So the loan amount, the new loan amount that will be taken in April is 168,000. And if you want to prove this, you can take this 168,000, you multiply by 9%, which is the interest, multiplied by by 1 month, which is 1 over 12. If you say 168,000 multiplied by 9 over 100, which is 9%, multiplied by 1 over 12, this is giving you 1,260. This is giving you 1,260 interest. So what we were doing here is to reverse from the interest to the loan amount. So we now know, because our instruction was to calculate how much are we going to be taken in the form of a loan from Janet Bloom in April. And the only key that was given to us was the interest per month. The interest is 1,260. So if we are reversing that, we started by taking this interest and we converted it to the amount per annum, because you can't be able to reverse the interest because the interest is per annum and this amount is per month. So you need to start by converting this amount to be per annum. So that's 1,260 times 12, and then you reverse, it's 168,000. And here we are proving that exactly the loan that we're going to be taking is 168,000, because 168,000 multiplied by 9% interest multiplied by 1 month, which is 1 over 12, is giving us 1,260. So 168,000 is the final answer. That is the loan that we are going to be taking from Janet Bloom in the month of April. So we are continuing, we are calculating the missing amounts. The missing amounts, the following one is C. Alphabet C. And what is it that is required in alphabet C? We are required to calculate the salaries of sales assistants for April. Salaries of sales assistants. Salaries of sales assistant. Salaries of sales assistants for April. Salaries of sales assistants for April. And the amount is not given. The only amount that is given here is the salaries of sales assistants for March. But the April amount is not given. And we are told that we need to go and see information E. And the information E is on page 10, where there is a story about the sales assistant. So let's go to our question papers and check the story of the sales assistant. We are told that the sales assistants all earn the same monthly salary. So they are all earning the same monthly salary. That's number one. And these sales assistants were promised a 5% increase in salaries with effect from April. So in April, they are going to be getting an increase in their salaries of 5%. And the business employed 2 sales assistants in March. So in March, we have 2 sales assistants and plan to employ an additional assistant from 1 April 2021. So the business is planning to employ an additional. So it means in March, they were only 2. Because we need to use March figures to be able to calculate the salaries of sales assistant for April. Because it is only March figures that are provided. We are told that their salaries for March was 22,400. The salaries of the sales assistants, it was 22,400. And the transaction told us that the business employed 2 sales assistants in March. They were only 2. So let's just divide this by 2 so that we are able to see how much is paid to each sales assistant. So 22,400 divided by 2. So each sales assistant is paid 11,200. Each sales assistant in March was paid 11,200. Remember the transaction that says there, they were promised a 5% increase in salaries with effect from April 2021. They were promised a 5% increase. So this amount without increase, we assume that is 100%. So if these people are promised a 5% increase, so we multiply this by 105, 105%. So by so doing, we are adding 5%. So let's see how much are they going to be earning now if they are giving a 5% increase. 11,200 multiplied by 105 over 100. It's 11,760. Each sales assistant will now be getting 11,760. They were earning 11,200 and they were promised a 5% increase. So therefore now from the 1st of April, each sales assistant will be getting 11,760. And remember that we said there is a transaction which says the business plans to employ an additional assistant from the 1st of April. We are planning to employ. So we had 2. If we are employing an additional one, so it would mean we will end up having 3. So now we have 11,760, which is their new salary after the increment, multiplied by 3 sales assistants. 11,760, that's 11,760 multiplied by 3. 11,760 multiplied by 3. 11,760 multiplied by 3 equals to 35,280. 35,200. This is what is going to be paid. The salaries of the sales assistants for April will be 35,280. Each sales assistant was earning 11,200 in March and they were only 2. With the 5% increase, their salaries will be going up to 11,760. And with an additional one, so it means the sales assistant will now be 3. So 11,760 multiplied by 3 equals to 35,280. And now Roman figure C has been solved. We now know how much is going to be paid to our sales assistants in April. And then Roman figure D, alphabet, this is D. We are now in D, alphabet D. The missing amount in alphabet D is rent expense for March. And we are told to see information F with how much are we going to be paying for rent. How much will be paid for rent in March. The only amount that is given is rent for April. And rent for April is 39,960. Rent for April is 39,960. And we want to reverse back to March. Good, how much was rent for March? How much was the rent for March? Right, if rent for April is 39,960, let's then refer to information F to know the changes. Information F, we are told, that is bullet 2. That's information F. The director secured premises in a local shopping mall from Debtor Ltd with enough space to cater for the expected number of customers. Rent is charged per square meter according to the floor area. The rent increased by 11% per annum commencing on 1 April. So rent increased by 11% commencing on 1 April. So this rent increased by 11%. And remember, when we are increasing, we always say that the standalone amount here is 100%. So if this amount was increased by 11%, it means to get here, whatever, there was an amount that was multiplied by 111 over 100 to get to this amount. So if we want to reverse to the original amount before increase, we need to just swap 111 over 100. So it will then be multiplied by 100 over 111. Because this rent was increased by 11%. Was increased by 11%. So that it will be 39,960 multiplied by 100 divided by 111. So the rent for March was 36,000. It was 36,000 before increase. You may even prove this. If you say 36,000 multiplied by 111, you are increasing it by 11%, because any amount is 100%. If you are increasing it by 11%, it will then be 111 over 100. 36,000 multiplied by 111 over 100 will give you 39,960. So in March it was 36,000 and it was increased to 39,960. And we are given rent after increase. We just have to reverse. And when you are reversing, you just have to swap this. It's 111 over 100. Because we are reversing, it will be 100 over 111. And then we are able to get to the correct amount of 36,000. Right. So alphabet D has now been resolved, which then brings us to the end of question 3.2, wherein we were required to calculate the missing amounts indicated by A to D. So we have calculated the missing amount in the cash budget A. We were required to calculate the cash sales for April B, loan from Janet C, salaries of the sales assistant, and D, it was rent for March, rent expense for March. Right, so we are now proceeding to 3.3. Proceeding to 3.3. With 3.3, it says, 3.3 says, refer to information G and H. Refer to information G and H. Advertising. Explain the decisions that the directors took regarding the budget and actual expenditure for advertising in May 2021. Code figures or calculations for 4 marks. We need to refer to information. We want to explain the decision that the directors took regarding the budgeted and actual expenditure for advertising in May 2021. Right. If you go to information G and H, advertising budget for April was 39,000. The advertising budget for April was 12,000. And the budget for May is 30,000. So that is the decision number 1. Advertising budget increased from 12,000 to 30,000. Advertising budget increased from 12,000 to 30,000. This is the decision. So it means the directors noticed that no, they need to advertise more. So they decided to increase the advertising budget from 12,000 to 30,000. That's the first point about advertising. And what we are noting in information age there, that's page 11, is that even though it was increased from 12,000 to 30,000, but the actual amount that was spent on advertising was 42,000. Actual amount spent on advertising is 12,000 more than the budget. The actual amount spent on advertising is 12,000 more than the budget. So you can see that there are two things which happened here. The directors decided to increase the advertising budget from 12,000 to 30,000. That's an increase of 18,000. But after May, when they go back to check now, comparing the budgeted amount with the actual amount that they have spent on advertising, the budget amount was 30,000 because they increased budget from 12,000 to 30,000. The budget amount was 30,000, but the actual amount spent on advertising there, according to information age, is 42,000. So the actual amount spent on advertising is 12,000 more than the budget. The budget was 30,000 and the actual amount spent is 42,000. So even though they had increased the budget, but they still went more. They still decided to spend more than the budget by 12,000 again. So that was the decision that was taken by the directors. And then the following question, which is a follow-up to this one, is that the directors ask you now for a report on the effect that the advertising decision have actually had on customers and sales in May 2021. Provide 2 points that you will include in your report, code figures or calculations. Explain how provide 2 points that you will include in your report, code figures or calculations. So now we want to know the effect now of spending this much on advertising. What was the effect? The first effects that we see here, when you look at information age, the first line, the first effect that we see, which is a positive one, is that the number of customers, the budgeted number of customers was 110, but the actual amount is 135. So customers increased by 25 customers. The business, there was an increase of customers by 25. There was an increase of customers by 25. The number of customers expected was 110, but the actual amount was 135. So there was an increase of customers by 25. That's the first effects that we are noting with regards to the effects that advertising had on customers. And the second one, the sales, but sales dropped. Even though the customers increased, sales dropped from 770,000 expected to 690,000 actual. So we are noting that the business has spent a lot on advertising, and then the effect of that spending is that the number of customers have increased by 25. And the second effect that we are also noting is not as positive as we were expecting, because our sales dropped from 770,000 expected to 690,000 actual. And then the following question to that is, explain how the decline in the national economy has affected the average amount that the customer spent in May 2021. The average amount that the customer spent in May 2021. If you look at the budget, the total sales is 770,000. 770,000 out of 110 customers. So the average amount that is spent by each customer here is 770,000. 770,000 divided by 110. So the average amount, this is the total sales, which is 770,000 divided by 110 customers. So the average amount that is spent by each customer is around 7,000. But now, with the decline in the national economy, we are noting that our sales went down to 690,000 and the number of customers is 135. So 690,000 divided by 135. 690,000 divided by 135. That's 5,111. 5,111. Even though the number of customers increased from 110 to 135, but the average amount spent by each customer has dropped. The average amount spent is 7,000 here, and with the decline in the national economy now, the average amount spent by each customer is 5,111. Right. Let's then go to 3.4. 3.4, refer to information F. Oh, consumable stores. They were still on 3.3. There is consumable stores there. Comment on whether consumable stores have been well controlled or not. Quote figures or calculations. Comment on whether consumable stores. Let's go to our consumable stores. Our consumable stores. The budget for consumable stores is 4,200. And the actual amount we spend on consumable stores is 5,520. So our consumable stores are now over the budget. They are over the budget. Our consumable stores are over the budget. But the question is that we need to comment on whether consumable stores have been well controlled or not. So these consumable stores, these are the items that our workers are using when they are repairing the customer's dresses. Remember, this business is selling expensive ladies' dresses, and they also repair. And when they are repairing, they use these consumable stores. So they had budgeted 4,200, but the actual amount is over the budget, which is 5,520. But what we are noting is that even the fee income for the repairs, they had budgeted 15,000 and the actual amount is 21,000. So therefore we cannot say that this was wasting. We cannot say that consumable stores was not well controlled, because like, let's say if you are repairing trousers and you had budgeted that you will use one roll of coating and you will be able to repair 5 trousers with one roll of coating. So if then the demand is too high to an extent that you end up repairing 20 trousers, then you cannot therefore expect that you will still use one roll of coating. If there is a demand and you end up repairing more trousers, it means even the quotient, which in this case will be your consumables, will also again increase. So we are saying that this increase in consumable stores is justifiable, because if you look at the fee income is also, we are then concluding by saying that consumable stores have been well controlled. Consumable stores have been well controlled. They are over the budget. Consumable stores are over the budget by, they are over the budget. We can even calculate what they are over the budget by how much. Our consumable stores, 5,520 minus 4,200. They are only over the budget by 1,320. They are over the budget by 1,320. While fee income, the amount we collected, while fee income is over the budget by, while fee income is over the budget by how much? Let's check. 15,000 budget and the actual is 21,000. So it's over the budget by 6,000. So we are gaining here. So we don't mind that the consumable stores were over the budget by 1,320, because we were able to gain 6,000 more in our fee income. So that is why our conclusion is that consumable stores have been well controlled. This over the budget by 1,300 is justifiable, because we can see that the fee income is over the budget by 6,000. So the business has received 6,000 more, which we were not expecting. So it means the demand for the repairs was too high. So as a result, we had to use a lot of consumable stores. So, but if you look at the difference, 1,320 that we wasted, but from that 1,320 we were able to get 6,000 more. So the business has gained there. Right, 3.4, which is the last question under question 3. It's with regards to rental and customers. We are told to refer to information F and H. Rental and customers, the owners of the property Propco Ltd informed the directors of Blossom Ltd of the increase in rent planned with effect from 1 April 2021. In order to economize on rent, the directors asked the owners Propco Ltd for a reduction of the area rented from the 1st of May 2021. Propco Ltd agreed to this request. Calculate the reduction of the area rented in square meters. So we want to know the reduction now in the area rented. So if you look at the rent budget for May, if you look at the rent expense, it's 39,960. 39,960, that's 3.4. 39,960. This is our budget for the rent for May, and we are renting 120 square meters. So we want to know how much does each square meter cost. 39,960. 39,960 divided by 120 square meters. So each square meter cost 333. So if now we look at the amount paid, the actual amount that we paid for rent, it is now, the actual amount is 31,968. When we had budgeted 31,968. And if you divide this by this amount, which is 333 per square meter, 31,968. If we divide it by 333, we are getting now 96 square meters. 96 square meters. So the question is asking us to calculate the reduction in square meters. We were renting 120 square meters. Now we have paid for 96 square meters. So the reduction will then be 120 minus 96, which equals to 24. So the reduction is 24 square meters. So which is our final answer. We had budgeted 39,960 when we are renting 120 square meters. So each square meter is 333. So if then we look at the amount that we paid, which is 31,968, and divide it by the amount of each square meter, we can be able to know how many square meters we paid for. So we paid for 96 square meters. So from 120 square meters to 96 square meters, we can see that the reduction in square meters is 96. So that was 3.4, which was the last question under question 3, which is budgeting. So let us pause here for now in question 3, and then just take a water break and come back to question 4 for stock valuation.